everyone, and a very warm welcome to yet another episode of Grow Your Wealth, a series brought to you by BQ Prime and powered by investment platform Grow, one that's fast, easy, and transparent for investors to use. As financial markets tend to capture the imagination of more and more Indians, we are looking at investment tools beyond the usual real estate, gold, and fixed deposits. It's equities that is something that Indians now want to look at. And this series aims at demystifying financial as well as technical methods of investing. We intend to help investors take the right investment decisions in stock markets. And this is yet another episode intended to do that. In the world of technical analysis, price action trading is one of the fundamentals. And that's what we will be demystifying and de-jargonizing in today's episode. For that, I have with me Dr. C.K Narayan. He's a veteran of India's financial markets and respected as one of the finest exponents of technical analysis in India. He has over 4 decades of experience and has been a part of large broking houses, catered to individuals at the retail level, and headed large institution desks servicing FIIs. He is also the founder of NeoTrader, an AI-based trading and analysis software. Dr. Narayan, welcome to the show.
Thank you for having me on the show.
Dr. Narayan, am I right when I say that price action trading is one of the fundamentals when it comes to technical analysis? And in fact, before that, let's start off with, firstly, what exactly is price action trading?
Well, price action is at the heart of it all. That is, that's indisputable. Now, what is price action? It's 2 words, right? Price and action. What is price? Price is the kind of culmination of everybody's hopes and desires and whatever is their opinions about the market as expressed about their opinions about the future based on whatever they are observing on the current. And then all these things interacting together creates the price of the day. So the price of the day is the sum total of all the known news and all the known views of people who are interacting in the market and which gets crystallized in a moment, right? So this is what is price. When you take prices collectively, then we describe it as price action. And the directionality of prices, which is what creates profits and losses or opportunities to either profit from it or maybe lose money from it, that is what is called as price action. And a collection of these price levels, when captured on a chart, that is what gives us an idea. Now, directionality or action of prices is relative to earlier prices, right? So that is why we are putting them up on a chart. So price action checks actually for relativity of movement. And when it is contoured with methods that define price action, it can give us forward-looking views. And that is the whole game. It is a wholly technical analysis dependent element, price action. And this is at the heart of technical analysis. Everything in technical analysis builds upon price action.
So could you show us how you use price action to determine what could be a possible and a profitable trade?
Sure thing. So we use price action all the time on the charts. And I would think the simplest way that one could look at it, or the most evocative or the most visible element within charting, is something called the candlestick chart. Right? A candlestick chart is so named because each of these, which represents a price of a certain period in the form of the high price, the low price, the opening price, the closing price of that time period. A time period, for example, could be 1 day. So if this is a daily chart, then each of these represent 1 day's trading. Or in this case, as you can notice here, this is a 15-minute chart. So each of these candlesticks represents actually one 15-minute time period. And in that, you can have different types of candles which get formed. So if you look at it a little more closely, let me just zoom that out for you a little. You will find that there are lots of candles with small bodies. The body is the area between the opening and pricing. And then those excursions to form the high or the low are called as the shadows. So you have something which is called as a long body candle or a small body candle. You will also have long shadows either on the top side or on the lower side. So all these make for different kinds of patterns, and this is how we look at price action as a collection of candlesticks which are representing us various aspects. And in this, there is also another one, which is if you look at this particular chart, you have green colored candles and you have red colored candles. You have long candles and you got small bodied candles. And you have long shadows on either side or small shadows on either side. So this kind of gives you a variety. So you look at size of the movement, the size of the body of the candle. You look at the frequency of the color, right? And you also look at the frequency of the either the long body or the small body. Like if you look at this portion, you have all the series of red candles. A red candle represents a bearish trend, a downward trend. So when you have a downward trend, the red color will dominate. Now, red and green are just the colors that I have chosen, but they are typically the default colors that you will find with most software. Green is this rising portion here has got more green candles, and they are definitely larger bodied candles than the red candles. So by dividing this into larger bodies and smaller bodies, longer shadows, lesser shadows, size, frequency, color, etc., we get an idea of how to use this. And there are other forms of candlesticks also, like Haikenashi and Renko, three-line brick, etc. So there is a variety of ways that you can look at the charts. There are other methods of looking at chart, but all of them give you the same set of information. What are prices doing and how are they doing whatever it is that they are doing?
Dr. Narayan, could you share with us what are some of the most common formations we see in price action trading?
Well, I certainly can show you the same chart, and I can take you through, what that particular chart was showing you. So now, if you take, let's say, this particular section, right, which I'm highlighting here, what you see here, okay, let me annotate that chart, is you're seeing a downward pathway, right? The market goes down, right, till here, and then it rallies up just a bit, and then it goes down again, and then it drifts off a little sideways to upward kind of movement. And then it drops down, and then there is another rally, and so on and so forth. This is how prices move. So what you have here is something called as a lower top. This is lower to this top. This top is lower to this one, and a lower bottom. And this bottom, yeah, and this bottom. If you compare these two, this is a lower bottom compared to this, and then the next one is still lower. So this is a sequence of what we call as a lower top and lower bottom. And this is one pattern which suggests that the trend is down, right? In addition, if you look at it, the size of the candlestick. Now, if you see, you got this very large looking or, mean looking red set of candles. Red candles are the bearish candles where the day closed below the open. So you have lots of red. Size, frequency, and color is something I mentioned. So you see there is a lot of reds, there is a lot of large bodied reds. So that's a kind of pattern that we look at. And when we have a lower top, lower bottom formation, we call that as a downtrend. Now let me just step back a little in this same chart. And at that point of time, if you see here, this was having a sequence of higher tops and higher bottom. So if you see here, it went up one top, a bottom, another higher top, a higher bottom, higher top, higher bottom, yet another higher top, and a higher bottom, and so on. And until this very place where the sequence of higher tops and bottoms ended. So this collectively is also known as a higher top, higher bottom, and this is the depiction of a trend. So these are how trends are made up of. And if I show you all this, I could probably also make another pattern here where I just join up these tops, and if I join up the bottoms here, right, we get a pattern which is like what we call as a rising wedge. That is, The entire price action is getting confined between steadily narrowing lines. So that's another kind of price pattern called as a rising wedge. Now, a rising wedge is a bearish pattern. Now, how do we know that the rising wedge is bearish pattern? Because technical analysts through the years, through the decades have studied many occasions of such a pattern, and they have come to the conclusion that more often than not, as high as 80% of the time, 90% of the time, a rising wedge is always followed by a decline. So when you had this rising market going on, there was no hint that the market would go like this. But once you saw a rising wedge pattern here, you get warned that there could be a decline. And once it breaks through what we call as a support trend line, then you had this big downtrend. So this is how patterns work. And trend lines, resistance, support, long body candles, small body candles, all of these collectively form patterns, which as a technical analyst, you learn to read and then put them together to form a plausible scenario for the future.
Well, what a wonderful way, once again, to explain, technical analysis and price action trading. You have the proof in the pudding, how the different patterns really predict what the stock could do next. And I think we're seeing that really play out in the example that Dr. Narayan shared with us. So how does price action trading, or rather trading using price action as a tool, score or have an advantage over other forms of technical analysis and fundamental analysis?
Well, you see, when you're looking at price action, you're largely eyeballing the chart, right? You're not really adding tools to it. There's a whole lot of tools that you can use in technical, and you can annotate the chart with lots of tools. But price action is the simplest. Now, let me share that same screen with you once again to illustrate the point. Now, you're seeing it's very vivid and very visible to you that there are red candles, and which are all part of a declining sequence. And when you look at the rising sequence, you see more of green candles. So green candles indicate bullish trend, red candles here indicate bearish trend. So price action is very visual, right? And you don't need to do extra work. And once you internalize this aspect of a lower top and lower bottom, which I described, then once you know that and you're able to spot it on the chart, you can straight away see that this portion of the chart is all lower tops and lower bottoms, whereas this portion of the chart on the left-hand side is all higher tops and higher bottom. So price action tells you at an immediate glance whether the stock is in an uptrend or in a downtrend, whatever the length of that trend may be. Now, if you come to the extreme end of the chart, it had a decline, and then it has had a rise. And if you will notice in the rise, you're seeing a circuit of green candles. So size, frequency, and color is something that I mentioned. So the color and the frequency of the green candles is more. And then if you look at the size, you're having long-bodied green candles, right? All the candles are long, which says that the buyers are to the fore. So when you read it through patterns, it gives you a lot of idea about how people are thinking in the market and how they are acting in the market. Ultimately, the charts capture the action of people, and every action is always preceded by a thought. So when you look at a chart, you're actually getting an indirect glance into the minds of people, as it were. Think of that as a huge advantage.
Well, if you want to learn technical analysis, you absolutely must start off with the very basics. And I'm sure Dr. Narayan agrees with me that the basics comprise price action trading. And I hope with this episode, we've been able to give you that introduction or the start into the world of price action. Dr. Narayan, thank you so much once again for joining in.
My pleasure.
And with that, we've come to the end of yet another episode of Grow Your Wealth. Stay tuned as we continue to de-jargonize the world of investment and technical analysis.